Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, May 12th, 2022. It is 10:03 Eastern Time, so we've been trading about half an hour, and figured it's as good a time as any to do a video. Lots of stuff I'm seeing today. If you're watching the video, you probably got my chart this morning. I've begun to pivot. Told you. That's just what I do. A trader needs to be flexible, and I may pivot back. Part of the reason well, whatever. Let me get into the chart, show you what I'm seeing, and also reminder, I said in that post, and this does play into what I'm doing here. I'm leaving tomorrow morning early, well, before the market opens, flying out to Hawaii, and I'm not going to be back until the following weekend. So I'll do my best. I'm going to bring a laptop and an extra monitor and try to get you guys some charts. But the timely updates are going to be near impossible with the activities we have planned, plus a 6-hour time difference. And I just want to let you know I will continue to try to do my best to get at least a daily update, if not every other day. And again, or anything significant. I'll break away from what I need to. If I have to send you something on my phone, I'll do it. Alrighty, let's start out here. I got a post out to you this morning, which might have caught some of you caught you off guard. And this is, again, I may pivot back. Let me show you what's going on here. So, as you know, we hit my second target this week, and I said we go through there. We'll probably continue down, and we have so far, and we may continue down. We're down right now. But I pivoted for the reasons I told you before, and some others I'm going to cover in this video. A couple points to note. Anything's possible. You know, the sport is sport till it's broken. It's been broken, but this is a weekly chart. So it is still certainly a possibility to ramp it back up and close on or back above the 299, we'll call it 298 to 300 level, which is T2, and that would be a successful defense on a weekly closing basis, because once again, this is a weekly chart. That's the most important close. Now, one thing or another is going to happen. We're either going to go down here quick within the next week or so and hit that next target, or possibly even T4. You have these trend lines down here, or snap back up. I'm going to get to the charts again and tell you, why I'm pivoting, and no matter what, I have to reduce exposure. I leave OCO orders in place when I'm on vacation, but it's hard to pivot with that. The best you can do is be stopped out of a trade, or enter a new trade if you have orders set up to trigger, to put you in a trade at a certain point. Okay, so that's QQQ, well below support, right? So by that metric, I should be pressing my shorts hard. Came into the day hard short, reversed this morning, and I've actually reversed again, and I'm net long as of this point in time. But do not go off what I say, because I can flip back. It's easy, a few clicks of the mouse, and I can go from net long to net short like that, especially with index ETFs and my active trading account. So here you have SPY, near term, second target hit. Again, these were targets laid out back late last year, early this year, and we're below that as well. So again, you say normally a check mark, and maybe it is. Look, you may want to stay short, and if you're a trend or swing trader, just watch out for any signs of reversal. If they're going to do it, it's probably going to be today. They'll probably start to reverse it. Print a green close today. We're down pretty good right now. Print a green close today, and then a green close again tomorrow, and that would be pretty bullish and could set the stage for what happens next week. So, okay. So on face value, by these metrics, this is bearish. We're breaking these supports, and the large caps are much more important than the small caps. But I take everything, there's a lot of instinctual gut feel trading, and also, not just gut feel. I showed you today, this morning, one big one. This is one of the biggest stocks out there. Great company. Nobody's going to deny that. And this was nothing short an amazing call. I guarantee there's probably next to 0% of people on Wall Street that figured when I highlighted this was the back test right here on February 4th. Showed you that as an objective short entry right there, showing you the initial move down to this trend line, which is exactly what we did from there. and then we went up one more back test, gave you a second objective short entry, also the 200 days. That also coincided with the short entries I gave you on the indexes when they all hit the 200s. So Amazon, being a big FANG, is going to go down with them, and that was the biggest drop in many years on Amazon. And so if you took the short, and that was my final target then, and is now this big support. So I bought Amazon today. I gave it to you guys as a trade idea on the site. You can either go long here on support or wait for that 60-minute wedge to break out right there. Pop, boom, your near-term targets for active traders that just want to game the, quick bounce. And even if that, I would go for at least T2 here. If we get a reversal, that's going to be a 19% gain. So you put buyers can buy short-dated puts. If I'm either going to be right or wrong here, if I'm right, it should hit that pretty quickly. And then if it does, whether it's quickly or not, or whether we go lower and then we hit those targets, which I think we will. I bought a big chunk of Amazon today in pre-market and added to it. And again, that's just solid weekly support. And all I'm looking for here, guys, I believe and I'll maintain that we started a bear market back in 2021 in the NASDAQ 100 and around the beginning of the year in the S&P 500. And I'm looking for bear market rallies to trade from here, and they're going to be powerful. And they'll convince the masses that the bull's not dead yet when we have the first one. And so my next trade, most likely at this point, I'll tell you time, if I swing it up here, trend trade, if the markets confirm, swing it up here. If I get that kick back to that 2690, which I had color-coded yellow, that was a big level when it broke. That's a 30% gain or rally, and then turn around and swing back down. The next stop in Amazon, if we're in a beginning of a bear market, will probably be here. I don't want to get ahead of myself. The day is young. The markets, the indexes, the large caps are below support, and that so it's a very contrarian call that I'm making here. Move. Part of it is I will have these stops in place, and we're going to go much lower. Really, at this point now, let me just tell you this. This is how I look at it. This is how I trade. All right, so this doesn't show this is the low of the day. The low of the day came right after open. That's it. I think if you take a stop here, if I'm wrong, we'll probably undercut the lows, maybe give it a little room. It's up to you. Stops will be a tight stop would be anywhere at around that low. If they run at it, maybe they make a slight undercut, so give it a little bit of room. That would be a tight stop. If we get that reversal, it's going to be pretty powerful. Divergence is kind of clinging on by the skin of their teeth here. Let me show you what else I wanted to cover today. I'm going to try to fly through these charts because if I'm right, things are going to move fast. And just stacked on some more NQ. There's a bullish falling wedge on the 60-minute chart. Divergence is just still hanging in there, man. That's one thing about this market. It's at every opportunity to start that waterfall selling, and it hasn't, and it's a little quirky, and every time it's different. But boom, we popped that. There's a near-term target for NQ. This is a 60-minute chart, 12707, and this is at least, I think, will come up here if I'm right and we get a reversal. Could be even more than that if we get a bear trap. So that's from today's lows, about where we open, about a 10% pop right there is your target. Minimum target about 8%. But again, remember, if we get an 8% and they hold it today, this is how I look. The charts, you got to look at one thing leads to another. So let's say we get an 8% rally from the lows, what I just grabbed around here today. Well, that puts us back about right here, which puts us back above T2 on the weekly, which means we then defended it successfully. And that's how I list multiple targets. That means things are going to play out this way. T1 hit. We had a little reaction there, overshot a little bit, bounce, T2 hit, we get a bounce, and again, targets to be determined. Believe you me, if this trip wasn't planned, I would be canceling the trip, but my wife would not be fond of that, so I'll try to get some Wi-Fi on the plane and trade and tell you what's going on today or tomorrow. All right, so that's QQQ. Let me move on here. So Amazon, I already showed you that perfect tag of that support level. Low a day 240. I had the support at 243.41. Remember, I always say if you're new to the site, I used to, back in the day, do what I called adjusted targets, T1 equals. Put an equal sign, and I'd put a little bit above. But I always say if you're on a short trade, I always cover a little bit above support, the actual support level, first of all, because that number may not be exact. And buyers will often step in early. I'm not going to try to eke out the last 0.2% on a trade. And so that's why I got out to you this morning reverse, and there's okay. So that's on, and again, on do the math on a 2,000 point security, a low a day of 248 versus 243.41. You're talking less than 5 points. That is a tiny fraction of 1% there. So that's that. So we're good there. Also in pre-market today, our SRS, I gave you IYR. I have to turn this on for you. This is what goes into my head here. A lot of things I have hitting my targets today, meaning support levels. I have to go here. Some of those were in the pre-market. So we go right here, and you can see a perfect tag at T3. So now I'm going to mark that as hit. I've talked about this quite a bit. When trading, always have a limit order on your your price target, the one you want to cover. And this is a big drop to get to T3, so without a doubt we're going to get a reaction there, or most likely. And that you when I've talked about this, but I'm just throwing a lot out here now. When I have OCO orders, and OCO is one cancels another on a short trade, that means you're going to have a stop loss order above wherever your stop is, and then a buy to cover order at your price target. Now the goal on any trade is to hit your target and not be stopped out. So I like to use pre-market volatility, which is often noise, especially in lower volume securities and ETFs like this. I want to use that pre-market and post-market volatility to my favor, but not to my disadvantage. What does that mean? My stops will never be checked the box allowed to be filled in the after-hours session. Interactive Brokers calls it outside regular trading hours. I uncheck that box for stop loss orders because I don't want to be clipped out with some errant little spike in the after-hours session or pre-market, which you can get in the less commonly traded securities, whether it's a stock or an ETF. However, I do want to use that pre-market volatility to get me out of my trades if a target's hit. So that's exactly what happened today with the IYR. And I gave you on SRS was the, if you wanted to use the juice, that was T3 was already hit during the regular session. But I told you too, SRS is a leverage ETF, so it's going to decay over time and differentiate from the actual underlying index. So that's why even if you're trading SRS, which you buy long, it's a -2 times short inverse of the REIT sector. You want to use the chart of IYR to time your exits on the trades. So there's another one. Point being that we had Amazon, one of the market leading stocks, hit support. And let me look at the rest of them for you real quick. We had IYR, SOXX. That's been one of our index shorts that we've had here. I'm sorry, sector shorts. Look at that, boom. And still there right now. I had T1 as a little zone here, good support. So we've swung the semis down. Our first short was way back here somewhere on the daily chart. And this has been a nice trade, and that's another one that has hit support. So I booked profits on the semi-shorts today. Doesn't mean it can't drop. And look, we're sitting on the edge of a technical cliff. The market could break down. Remember, volatility, they've been holding the VIX down. The VIX is potentially ready to explode. So here's a takeaway. If you are considering pivoting to a net long position today, or you already are net long, do not get married to that bias, because if we turn around and dump today and this week, and SPY and QQQ cannot close the week back on or above support, and all of a sudden we start to get that waterfall selling finally, it could be ugly. On semis, I don't have my next target, which I believe will be hit. These are bear market targets, is way down here, 271, and that would be from where we're at now a drop of another 28%. You don't want to ride that out long. But as of this moment in time, and that can change in the next hour or 20 minutes or by tomorrow, I think we probably get a bounce here. I think especially, again, if the indexes can hold. And then let's go back to the market leader. So I showed you a couple sectors here. Of course, last but not least, or not last, but IWM. There's a target I've been very adamant on and calling for a long time since IWM was here before we even broke down. That was a big sell signal number one. We hit my first target as expected, bounced, went in this trading range, gave you multiple reshorting ops or new shorting ops for those of you that missed the initial breakdown at the bounce back to 209. And then I told you the next sell signal would come when we break the bottom of the range, T1, which we did, right down to T2. Just charts are playing out phenomenal, guys. And now there's no guarantee we don't go down and hit my potential third and fourth, but for me, that's enough. Especially I'm jumping on a plane tomorrow. I'd rather be long with stops in place in case the market crashes because I think the odds are good. When I have, again, here's what I'm saying, not one, but multiple sectors, at least one major index here hitting support. Let me see what the mid caps are doing. I didn't even look at that today. There you go. Look at that. Low of the day on MDY, 424.40. Again, against a target of 425.13, hit. So there's the common theme. The more things that hit support, the more likely you are to see some buying. Now let's just wrap up looking at the market leaders, and I'll get back to work and let you do the same. Apple. Okay, so I told you Apple broke the trend line. Apple broke the 200 days, right? And that was a big leader, last to break. Well, guess what it did today? It also hit the same chart I've been sharing here on the weekly chart. 142.50 is pretty good support on the weekly. So do I think that's it for Apple? No, but I think we probably bounce first. This is support, support, support. That was an all-time high there. We broke out to new all-time high. We back tested it successfully, went up, and we're back testing again. So Apple, my guess, boom, come back, rally up, back test the trend lines from below, as well as the 40-week, aka 200-day moving averages, and that would give you, if so, a bounce of about, depending on when we get there, about 10% in Apple. And if Apple bounces 10%, the market bounces. Microsoft just broke big support, but we have a level right here. You know what I'm going to do? That was support. I'm going to leave that line there. I think it was valid, but we also have a major reaction high right here. See that? And so if we can recover by the end of the week, then it's going to hold that support zone, we'll call it. The overall technical posture is still bearish, guys. Don't. When I pivot, I'm pivoting just near term, and I may pivot back. Don't get me wrong. These are clearly bearish charts. Everything I've said and maintained for a while now. Back here, I thought we were about to enter a new bear market, and as time has gone on, we've had nothing but check marks there. So hopefully that's clear to you. And if we don't bounce here, Google's next. Here's the next stop. We have some good support coming up on Alphabet there at 2130. Amazon, if somehow happens to break that level, I think what will happen is some may continue to fall to the next targets. Amazon could go through here a little bit. It'll probably hover around here. My next target, long-term target, 1682, but there's a lot of support between there. So what I'm doing now also, and I mentioned this in one of those posts, I'm going to start picking my favorites, those that I think have run their course, and in that way, and you can do the same if you are still net short the markets, but start going with the most bullish looking stocks as a way to hedge up. They'll probably have less downside, and that's another way for me to say this, that if the market crashes, I think Amazon will have less downside than some others that don't look as good or aren't at key support yet. Tesla, I don't see much there. There's a previous reaction low. Alphabet I already covered, still there. Facebook, I already covered that one recently when they reported earnings. Nvidia, there it is. Look at this. It's not mere coincidence that a lot of the semis, SOXX, hit today, my first target on the weekly. That's what we're on now, the weekly. And here's Nvidia. Well, it is the king of the semis now. Intel lost that title a while ago. Low a day 156.48 versus a target of 157.27. Close enough for government work. Time to recover and reverse the semis. Broadcom right at support, holding the trend lines there, the 40-week moving average, 200-day moving averages, and this weekly trend line, which I'll just tweak a little bit here, put it right like that, tighten it up here. All right, I think I've showed you enough. Let me see if there's anything else. No. Let me get the video out to you guys so you know my thoughts. Um, and let me tell you, with as oversold as we are, if I'm right, the rally can be pretty explosive. So do what you want, but don't stay too late, too short to the party if you get that evidence. So I showed you all the levels to look for, things to get, watch if they're recovered, support levels that have recently broken in some stocks. And as I always say, if you don't know what to do, if your head's spinning, I told you this market will chew you up and spit you out if you're over leveraged or you're not experienced and adept and adjust quick. Then keep it light. Go to cash, watch and learn. All right, guys, I'm going to wrap the video up and get it out to you. This has been Randy Finney with Right Side of the Chart. Best of luck in your trades today.